In this learning objective, we will prepare the statement of cash flows using the direct method. Under the direct method, companies compute net cash provided by operating activities by adjusting each line item in the income statement from the accrual basis to the cash basis. Companies report only major classes of operating cash receipts and cash payments, and the difference between the cash receipts and cash payments is the net cash provided by operating activities. As I just stated, companies report only major classes of operating cash receipts and cash payments. So we would report the cash receipts from customers, as well as cash payments to suppliers and employees. The difference between cash receipts and cash payments is the net cash provided by operating activities. An efficient way to apply the direct method is to analyze each item reported in the income statement in the order in which they are listed. You then can determine cash receipts and cash payments related to those revenues and expenses by making the necessary adjustments. This slide presents the adjustments required to prepare a statement of cash flows using the direct approach. This information has been summarized in a handout that has been posted to Blackboard. To explain how to prepare a statement of cash flows using the direct method, we will use financial information from Computer Services Company. So we're going to use the same numbers we used for the indirect method. If you remember, in step 1, a company must convert net income from an accrual basis to a cash basis. This conversion may be done by using either two methods, the indirect method, which we covered in Learning Objective 2, again, that's what most companies are using, or the direct method, which we will be discussing in this learning objective. Both methods arrive at the same amount for net cash provided by operating activities. They differ in how they arrive at the amount. In order to prepare the statement of cash flows, we need a current income statement. When we are using the direct method, companies compute net cash provided by operating activities by adjusting items in the income statement from the accrual basis to the cash basis. So a couple of items that I want to point out. We have sales revenue of $507,000, cost of goods sold $150,000, operating expenses are $111,000. We have interest expense of $42,000 and income tax expense of $47,000. So we're going to convert these items from an accrual basis to a cash basis. We also need a comparative balance sheet as well as additional information. Let's begin by analyzing the items reported in the income statement in the order in which they are listed. Our sales revenue was $507,000. Our cost of goods sold is $150,000. Operating expenses are $111,000. Income tax $47,000, and our interest expense are $42,000. And again, all these numbers are coming from the income statement. The next thing we have to do is determine the cash receipts and cash payments related to these revenues and expenses by making the adjustments noted in this slide. So let's start with our accounts receivable. If we look at our comparative balance sheet, we know that our accounts receivable decreased by $10,000, which means we want to increase our sales revenue so that we arrive at our cash receipts from customers of $517,000. All right, let's take a look at our inventory. We know our inventory increased, so we want to add that to our cost of goods sold, but our accounts payable increased, but that actually reduces our cash payments to suppliers. Again, if you take $150,000, you add $5,000 and subtract $16,000, you're going to arrive at cash payments to suppliers of $139,000. Right, our prepaid expenses increased. There was no change in our accrued expenses payable, so our cash payments for operating expenses is going to be $115,000. When it comes to our income tax expense, We decreased our payables by $2,000, which means we're going to actually increase our cash payments for income taxes so that we would report $49,000. Again, there is no change in any liabilities on our interest expense, so our cash paid for our interest expense would be $42,000. Under the direct method, we report only major classes of operating cash receipts and cash payments, and the difference between the cash receipts and cash payments is the net cash provided by operating activities. The investing and financing activities are measured and reported the same under both the direct and indirect methods. When a company uses the direct method, it must also provide in a separate schedule the net cash flows from operating activities using the indirect method. We prepared the statement of cash flows for Turner Company using the indirect method. In this exercise, you will complete the statement of cash flows using the direct method. Remember, both methods arrive at the same amount for net cash provided by operating activities. They only differ in how they arrive at the amount. The investing and financing activities are measured and reported the same under both the direct and indirect methods. When it comes to this learning objective, be ready for a few multiple choice questions similar to this one, essentially testing you on the theory. If you see a question like this, again, you need to remember that the cash receipts from customers is going to result from that sales revenue that's listed on the income statement. Again, you're going to increase it if there's a decrease in accounts receivable, or you're going to subtract or reduce that revenue if there's an increase in accounts receivable to arrive at that cash receipts from customers. In this example, we know that our sales are $129,000. We also know that our receivables decreased by $2,000, so that if we were using the direct method, the cash receipts from customers would be $131,000.